Okay, good afternoon. Good evening, everyone. Please confirm if you can hear me, please. Oh, okay, sorry. So we are some minutes behind the schedule. We are some minutes behind the schedule. I'm so sorry, and never my intention. It was the network. Please confirm if you can hear me again so that I can proceed to our class today. Like I promised, this class is going to be two sections.
Why hearing
Please
you?
don't let us. Okay, so this class is going to be two sections. We are going to start today and hopefully finish it off on Friday. So that is what we are going to do. So although let me see. So just I want to quickly copy the link for the people on YouTube, people that couldn't join, so that they can join the YouTube this thing immediately. So this chapter today is very, very important for everybody. Like very, very important. So if you actually have intention of passing advanced audit and assurance, this is this is the right class. You need to be attentive. Although I don't know if some of you here, what I'm about to say, I'm not saying it because I'm just saying it for your information. Please confirm if you can hear me very well. That's why I'm shouting. Can you hear me? Okay. Someone said my voice is cracking. Can you hear me very well?
Yes, sir.
Okay. So, uh, I'm just saying this for most of you that actually that subscribe to the YouTube channel on Sunday during my private section with some of my people in my private class. I have uh, I have explained this chapter. At least we use about almost 4 hours on Saturday. So for you, I'm just saying for you to know that this chapter is very, very important and it is the heart of our syllabus. We need to be very, very attentive and we need to be on our toes so that everybody will understand. Because if you don't understand this chapter, hmm, we are not going anywhere. So that is why I will not rush. I will not rush. For at least in the next 1 hour, 1 hour, 15 minutes, we'll be able to understand very well what we have to do under this section. And this chapter, we are going to be making reference, a lot of reference to all the, to almost, to like major ISA in advanced audit and assurance, major ISA from ISA 700 down to ISA 720. So let us sit tight and enjoy the class very well. Please, let us be attentive. Don't let us disturb the class. Please mute your mic, irrespective that I give everybody chance or audience to talk. Please do not disturb the class. If you have any question, please kindly raise up your hand and ask politely. And if I have question, I'm going to ask. So please do not disturb the class. Thank you. Georgina, any question? Any issue?
Yes, please. Good evening. Sorry, I just wanted to confirm what chapter are we looking at?
It's chapter 14.
Okay, thank you. Thank you.
Okay, so like we used to do, like our normal usual routine. You see, this chapter is out of our advanced international, as I said, and hopefully by God grace, next week Friday we'll be done with this our chapter review. Then we'll go to another important part, which is on how to answer our question in the exam. which is very, very important. And these are the aspects we are going to be discussing during our revision period. Please, I want to implore everybody, please, for your own sake, people that have written the paper more than 3, 4 times, they will tell you advanced audit and assurance is the hardest course to pass in professional. Please do not joke with it. For your own good, please. During that revision time, sir, we are not collecting anything from you from WPS. So that's the only thing you can use to help yourself. So, irrespective of how much, I don't know, we've not discussed on it, be part of the class and the part of the people that are going to benefit from the revision class. All right. So I say, so this chapter is chapter 14, audit reporting. You see all those things we've been doing, gather evidences, we use audit planning, we use audit approach, we know about the practice management, where we have discussed extensively on the professional responsibility and liability. Now, after all our audit work, how we expect to report our work. So, this chapter is going to dismantle everything you need to know on how to report your audit work to your client. So, we shall be looking at the meaning of audit reporting, which is covered by 700. Then we'll talk about expectation gap. In all this explanation, some people still think that the work of an auditor is to detect fraud and error because they think that auditor use 100% sample in all in transaction picking before they can form an opinion. They have this mindset that the audit report should be free from error. So that is what we talk about. That's what we discussed, or the meaning of expectation gap. We talked about the expectation gap in our chapter 4, where we talk about the performance gap, the liability gap, and the operation gap. Then generally, the expectation gap is still in the mind of users of financial statement that this is the responsibility of an auditor. Whereas the responsibility that the public have in their mind is quite different from the responsibility of auditor, that is statutory responsibility of auditor. Let me just put it like that. The way and manner in which auditor are expected to do their work as regard to the regulatory requirements is different from what the public actually think is their responsibility. So under this chapter, we shall also going to remind ourselves the meaning of expectation gap. Then closing of expectation gap. How are we going to let the public know that, oh, this is the actual responsibility of an auditor, this is the responsibility of the management, this is the responsibility of the public, which are also going to be explained to ourselves under this chapter. Then we'll also talk about the meaning of true and fair. When something is true and fair, how does it relate to reporting of our audit work? We are also going to discuss about it here. Then the aspect of unmodified audit opinion or audit report as covered by ISA 700. We discuss about it here in this chapter. The condition that might warrant you to give an modified audit opinion or adverse audit opinion or disclaimer opinion. We are going to discuss about it here. Then we used to talk about key audit matter, which is covered by ISA 701. What is key audit matter? How does key audit matter has to be involved or has to be reported in our audit report? It's also going to explain about that. Then ISA 706, which is on emphasis of matter. So here we are going to discuss what is the difference between key audit matter and emphasis of matter. Then we're also going to talk about ISA 705, which is modified audit opinion. Then we'll also talk about ISA 720, which is on other matter paragraph. All these things will be explained, and all these things have each section in our audit report. And we are going to explain them one after the other. Then what are the requirements of what are the audit requirements or things that should be embedded in our audit reports in accordance with CAMA 2020 Act. We are also going to be discussing about that, the modified audit report on ISA 705 and 706. 705 talks about modified audit opinion, while 706 talks about emphasis of matter. We are going to be discussing about that. The auditor responsibility relating to other information. If there is any other information that need to be included in our audit report, how do we include it in our audit report? We are also going to talk about it. The impact of opening balance comparative and all, which is covered by ISA 510 and 710. We are going to also discuss about it. Although this opening balance comparative has been discussed during our audit approach in chapter 6 before, the impact of going concern 570, ISA 570, uncertainty of going concern. If there is any going concern or there is any uncertainty that the company is not going to be in existence till eternity, if there is any element like that, we should also be reported in our audit report, and how we are expected to report it. We are also going to talk about it. Communicating with those charged with governance in aspect of any deficiency that we see in our audit work. How do you communicate it with the people in charge of the governance of the organization? We're also going to discuss about it. Communicating of the internal deficiency, then specialized area, and also our management letter. All these things shall be reported and discussed, explained under this chapter. So let us begin. I'm your regular host. My name is Olatunji Idris. Please confirm if you can hear me, everybody. All right. Don't let me bore you with my.
We can hear you. We can hear you.
Okay. So, like we used to see, like the other chapter that we'll be discussing before, you will see that from everything, our exam contest will just be like 2 or 3 lines. But let us take a look at this exam contest together and see what we are expected to know from this chapter. Let us see together. Exam contest. This chapter is fundamental to students. Fundamental, that is, it is important to students, advanced audit and national studies, as it relates to output for which client pay a fee. That is auditor assurance report. Following a revision of the basic structure of an independent auditor report as encountered in your earlier studies, you will then learn about the various modifications that may be required in auditor's report. You will encounter the various items relevant to this final phase of the audit, such as ISA 510 and 710, opening balance and prior year comparative respectively, and of course, early ISA 700 series, especially on auditors' reports. You will also need to be familiar with nature and content of communicating with clients, and in particular with those charged with governance. For completion, the final section brief address special purpose audit report. So, at the end of this chapter, everybody, we should be able to, number one, we should be able to audit opening balance and comparative. 2, we should be able to explain the impact of going concern on auditor's report as required by ISA 570. Describe in detail the content of an auditor's report. Then we should be able to identify when the basic auditor's report should be modified. When we can modify our audit report, that is when the account is not free from material misstatement, we are expected to modify our report. And in any way, which way can we modify our audit report? We should be able to also say that after the class. Then explain the auditor's duty with respect to other information in document containing audited financial statement as per ISA 720 rather. Discuss which matters should be communicated with those charged with governance and discuss the communication process. You also should be able to briefly explain the form, content, and use of specialized audit report. So, my dear professional, what do we understand by auditor's report? Let me ask us this question. I just need two people, just two or three people to give me their own thoughts about auditor's report. What is what do you understand by reporting or audit in accordance with ISA 700? Dan, please, you have the floor. Good evening.
Good evening, sir.
Good evening.
Auditor's report is basically the this does the information that the auditor has been able to gather throughout throughout his auditing, throughout his audits, throughout the audit. So from the beginning of the audit to the end of the audit, so it could contain the plan of the audit, the um, the um, the specific thing that they actually
No,
discovered.
sir,
And all of that.
you are mixing it up. You cannot plan audit. It cannot be embedded in this report. You are giving reports of what you have done. So you are not planning here. I'm sure you understand what I'm saying because from your
Okay,
explanation, I can see planning there. Okay.
okay.
So
So
please, you have
I'm
the
not supposed to.
floor. You can continue,
Yeah.
sir.
Okay, I'm
No,
not supposed to.
that planning nullify everything because you are giving feedback on what you have done. Planning should be
Okay,
at
so
the initial.
basically, okay.
You understand what I'm saying?
Yes, sir. Yes, sir.
Okay.
So basically, it's just talking about the specific the information that the auditor has gathered throughout his audit, the key issues that he has seen during the audit, and then also lastly his opinion about the audit about the audit. So if he's going to be giving a free and fair view about
Yeah, that's well, that's fair enough. Actually, yes, you're on the line, even though you are not trying to put this in another in order. But I know you have idea of what you are talking about. So I'm sure you'll be able to put it down very very well. But let's listen to other people. I just said three people, so I need Fetia, please put down your hand and Olubumi. So I will only attend to Devina and Yetunde maybe another time and then if first so Devina, please, you have the floor.
Good evening, sir. And
Good
an
evening.
audit report is a report in which an auditor gives his or her opinion based on the financial statement just concluded audit in a particular company.
You did not put it very well. Yes, I know you have an idea, but you did not put it very well. So, but it's fair enough. I know you have idea, yes, but you did not put it very well. You see, this report, this audit report is more like our communication tools, the tools that we use to communicate our audit exercise. Is what we call this report. When you say report, you are giving uh, essential feedback on what you have done. So that is what we call this report. I know you have the idea, but you did not put it very well. All right, Yetunde, please, you have the floor.
Hello, sir.
Yetunde, yeah, I can hear you.
Audit reports is a process where the practitioner, can you hear me? Where the practitioner
Yes.
communicates with his clients on the job it has done.
Okay. Yes, that's fair enough.
Then
Even though
it
you are
is
reading
written
from
after
the
all the.
okay.
Hello, sir. I'm still saying something. Audit report is
Go.
written after all the evidence has been gathered.
Okay. Is
Yes,
that
sir.
all?
Yes.
Yes. Oh, in fact, all this explanation you guys are giving me is not comprehensive enough. I need this standard, someone that will just stand, give me this definition that all these reports can be defined as so. It's also include this, include this, include this. Very, very should be comprehensive, not all this one where I know we have an idea about it, but it's not where embracive enough. So, well, sorry, I will not be able to take more questions from anybody. Please, BA, please mute your mic. You are disturbing the class, please. Mute your mic, please. So, okay, let me just see. Maybe I should try some people more. Olubumi, please, you have the floor. Let's hear you quickly. Your contribution, audit report. Quickly, Bumi, Olubumi. You are not there. I'll call another person. Okay, Olatunji, Mr. Olatunji Ahmad, my namesake.
Okay.
Please, you have the floor.
Good evening, everyone. Audit report is a formal report written by an independent auditor to examine the financial statement of an organization and whether
You started very well. Not to examine. You are not examining yet. You are giving report on what you have done, what you have seen. You are not examining again. You started with that it is a formal document or a written document given or by what, by an independent auditor, not to examine.
Okay,
So I need to quickly correct it there.
Let me put it in this way.
Okay.
By an independent auditor, after examining the organization financial statement, as of whether the statement is free from material misstatements.
You started very well, but that key point is missing there. I know everybody have idea, at least when you say audit reports, but this thing, we are not expected to write this kind of this thing in the exam, and we are expecting full this thing. I don't know what's going on. But let's see. Yes, Mr. Latunji, you tried. I love that the way you started. It makes sense. At least I'm even looking for another person that will continue from that distance and just make it a rule. But if at the end we did not see, I'm going to just, even though I will still stay my own. So let's quickly hear from other people to their opinion. Kiki, please, you have to be fast about it. Please, as I call you, you answer me fast. Then just have 5 seconds. If you can't, I will.
Good evening, everyone.
Good evening.
An audit report is a written document presented by an independent auditor to their client on the financial statement or on the audit work they carried out, to express their opinion that the financial statement is free from material misstatement.
It's like, I don't know whether you are reading or you are just giving me from your mind or the way you understand it.
Yes, I'm saying it offhand. I'm reading from anywhere.
Yeah, no. I'm saying, like, you are not you say the sentence, you pause, you say it, you pause, you say it, you pause. Like, yes, you, at least that key point I'm looking for is actually like in definition. So in order not to waste our time, thank you, Kiki. So this is what we please, you can mute your mic. This is audit report. Mute your mic, please. Okay. So audit report is very, very simple. You can go like this. Audit report can be defined in accordance with ISA 700 as a written report. Written report established by an independent auditor to express an opinion on the financial statement. You can see, can be defined as a formal report established by what? By an independent auditor to express an opinion on the financial statement. You can also put it like audit report can be defined in accordance with ISA 700 as any formal document given by what? By an independent auditor to provide shareholder with an opinion or to provide what? Shareholder with an opinion. To provide shareholder with an opinion on financial statement, or whether the financial statement is fairly presented free from material misstatement, prepare in accordance with regulatory requirements, and what? Prepare in line with. Oh no, let me just start again so that I will not. If I'm just trying to, I want to put it together so that it will be elusive and abrasive enough. Audit report can be defined in accordance with ISA 700 as a written document or a formal document established by the external auditor, by the independent auditor, let's read it like that way, by an independent auditor to provide the shareholder with an independent opinion on whether the financial statements are presented fairly and in accordance with what? With regulatory requirements. You can as well put it like it can be defined as a process where practitioner communicates with his client on the job he has executed. This communication, however, involve expression of an independent opinion by an independent auditor on the financial statement, whether it is free from material misstatements, fairly presented, free from error, and prepare in accordance with regulatory requirements. So, in any way you want to shape your definition, let it be that keyword, express opinion, because you are trying to communicate back to the shareholder on what you have done on that audit engagement. And by that, you are trying to communicate and give your opinion. So, in any way you want to shape your definition, that opinion must be present in your definition because you are trying to communicate on what you have done, and you are by giving your opinion or based on what you have done or what you have seen or what you have observed. You are hereby giving your opinion on that said financial statement. So, in whichever way you want to twist your definition, as the case may be, let it be known that that keyword to express an opinion and is a formal record that is used to communicate the job done and also to express an opinion on the financial statement, whether it is fairly presented and free from material misstatement, should be present in your definition. My dear professionals, please, I hope I am clear enough. I hope you understand. I'm not rushing. This chapter, we cannot finish it today. So we'll continue, finish it on Friday. But we need to understand the concept. For those of you that maybe that you are just lucky enough to come across this live section on Saturday, you will see you will notice the way I was calm and I took my time to explain very well because I know the importance of this chapter. So we cannot joke about it. We cannot joke about it. We need to take it very, very slow and steady so that everything is going to go well as planned. So let us proceed now. What is now audit report? Okay, so let us go and see how we can go about it. Okay, so let us proceed.
We cannot hear your voice again.
It's my network. I'm back now. Please confirm if you can hear me. It's my network.
Okay.
Oh, I'm back now.
We can hear you, sir.
Okay. Okay. So, what are we saying? Where do we stop? So, haven't we explained to ourselves what we were, the absolute meaning of audit reports and what are the things that should be embedded in our definition? So, let us proceed and see what we have. Who is that now? So, ma'am, please mute your mic. Do you want me to log this class? Abba, he has on mute again. Okay, don't worry. I mute everybody. Please confirm if you can hear me very well, everybody. All right. So let us go. We have explained to ourselves the meaning of audit report. So let us see what we have here. So this can be seen as a process where the practitioner communicates with his client on the job it has executed. The auditor's report on financial statement is only direct communication between the auditor and the owner of the company. The auditor's report is things not to be explicit enough, hence it creates room for expectation gap. See this word, the auditor report is things not to be explicit enough. It's telling us that people think that unlike before now, auditor's report used to be like this kind of report that is not detailed enough. It's not detailed enough. However, there are some key things that need to be present in auditors and in the report. They were never incorporated in the report before, but as time goes on, so those things they now see that they are very, very important and need to be reported or included in our auditor's report. Those are the likes of those things you'll be seeing, like ISA 701, which is on key audit matter, ISA 706, which is on emphasis on matter, ISA 720, which is on other paragraph matter, which ISA 570, which is uncertainty ongoing concern. Those are the things that were not included in the auditor's report before. But because it makes the audit report to be not to be explicit enough. So, and people have it in mind that, the auditors has used or have spent or they use almost virtually all their time, like use 100% audit procedure, that they just have this mindset that auditors report should be free from error because auditors are used 100 they check 100% on transactions and they are responsible to detect fraud and error. That is what they have in mind. And because this audit report is not explicit enough, then it creates room for expectation gap in the mind of the user of financial statement. So here we'll also explain what are the things that are missing in the auditor's report before that is not making people to now believe that, if there's any liability on this financial statement, I'm going to go back to the auditor. So we are now going to explain the meaning of expectation gap and how to remove expectation gap from the mind of the users of financial statements. So let us proceed. Now the auditor's report. The now said the report on the financial statement is the only direct communication between the auditors and the owner of course, to whom the auditor normally reports. In the past, this is what I'm saying. In the past, the auditor's report was criticized for being too brief, to allow the general to understand the nature of an audit and the meaning of auditor's report. This was seen to be major cause of expectation gap. The problem that user of financial statement expect from the audit than statutory and other regulation requirements, meaning that auditor's report is seen to be too brief before. It is just too brief, and some important content that need to be embedded or that need to be included in the report were never included. So, and create room for expectation gap. So, we are now going to explain what is the meaning of expectation gap, of which we have discussed about it in our chapter 4, earlier chapter. Then we'll also talk about removal of expectation gap from the mind of of the user of financial statement. So let us go. The auditor's report. The auditor's report on the finance. Okay, now expectation gap. That's what we want to discuss now. The term expectation gap. I don't know what's wrong with this my system this evening. The term expectation gap refers to the fact that the public perception. The term expectation gap refers to the fact that the public perception of the role and responsibility of external auditor is different from the statutory role and responsibility. The expectation of the public are often set at higher than that at which the external auditor. So what we are saying in essence that this expectation gap, it is this perception that the user of financial statements are on the roles and responsibility of auditor and the actual statutory role and responsibility of an auditor. So then it leads to expectation gap. Let us proceed. We are not rushing today. We'll take our time. We'll take our time very well. So, please, are you seeing my screen, everybody? Are you seeing my screen? Everybody, don't be annoying though. It's network. Oh, I'm just trying my possible best. I don't know. It's network. And I'm trying to see what I can do to make everything work better. So please confirm if you can hear me and if you can see my screen very well. So you're just going to bear with me. So I'm trying my best. I don't know what's going on. So let us proceed. We're talking about expectation gap. That because the audit report is not comprehensive enough, it is too brief, so it leads to expectation gap. And the expectation gap we are talking about here is that it is that difference between what the user of financial statement think that it is the rules and it is the responsibility of an auditor and what statutory responsibility of an auditor. That is the difference between what the user think that it is the responsibility of an auditor and what it is the actual responsibility of an auditor as stipulated by the statutory requirement. So let's go. Now, some example of misunderstanding inherent public expectation are as follows. One, the public believe that the audit opinion in the auditor's report amount to a certificate that the financial statements are correct and can be relied upon for all decision-making purpose. They have that mindset that financial auditor's report is that certificate that tell them that the financial statement is entirely free from material misstatement and it is error-free, so they can rely on it for decision-making. Is it possible, everybody? Is it possible that the financial statement that they use 1 year to prepare and you auditor, you just go there for like a month, and and the public should have this mindset that the financial statement is 100% correct. Is it possible? It's not. So they have that mindset that that audit report is certificate that tells them that, oh, the financial statement is free from error, so they can rely on it for all their decision making, which is wrong. Another one. Okay, including decision. Okay, and about takeover. So the public also believe that the auditor has duty to prevent and detect fraud and error. Is it the responsibility of an auditor to detect and prevent fraud and error? No, it is the responsibility of the management. And okay, the public also assume that in carrying out his audit work, auditor tests 100% of the transaction undertaken during the accounting period. Is it possible? No. So one consequence of this misstatement has been increasing tendency in some countries to undertake legal action against auditor, sometimes on a frivolous basis, in the belief that the auditor should have prevented misstatement in the financial statement or should have prevented fraud. So these are expectation gap. Example of expectation gap. They think that auditors have test 100% transaction undertaken during the financial year. They think that auditors report is that certificate that guarantees that the financial statement is 100% free from error, and they can rely on it for all decision making. They also have believed that it is the responsibility of an auditor to detect fraud and error, which is not statutory responsibility of an auditor. So how do we respond to expectation gap? How do we respond to expectation gap? So let us go. Let's on to the problem of expectation gap. Honestly, I don't know what's wrong with this. Please confirm if you can hear me, everybody. Can you hear me, please? Okay. Let's on to the problem of expectation gap have been varied between countries. In some countries, corporate governance code have been changed to strengthen the role and responsibility of director for sound internal control and accounting system. The auditor report is addressed to the owner of the company, not to the other users of financial statement. In context of auditor's liability, some countries such as UK allow auditor to include in an additional paragraph in the auditor's report after opinion paragraph disclaiming any liability that may arise from the use of report by a person or other than those whom it is addressed. However, this currently is not in the case in Nigeria. Let us take a moment back. For those of us during our undergraduate year, we've heard about Aaron Company before. I'm very, very sure of that. Aaron Company in 2001. Aaron Company. I'm sure everybody have heard about it before. Hello, are you guys hearing me at all? Okay, so the Aaron scandal in this man. Hello, please, everybody, please confirm if you can hear me. If this network persists like this, maybe we'll probably have to continue on Friday. But let's see. Let us proceed. So, immediately after it was my network, it's not me. That's why I'm asking. Please, can you hear me very well now? Is my voice okay now? Okay. So immediately when the company collapsed in 2001, That is when they bring Sabana-Osney law. Yes, Sabana-Osney law was enacted in the year 2001 to strengthen the public awareness about the responsibility of an auditor. It is then they now strengthen that it is not the responsibility of an auditor to detect fraud and error. It's not the responsibility of an auditor to prepare financial statements. It's just there to audit and give opinion on the said financial statement. So it is there they establish that the directors director have roles and responsibility to strengthen the organization. Then they also need to provide internal control system for the organization. So all these things were enacted in year 2001 after everyone collapsed in Sabana State law. So nevertheless, that is what expectation gap is all about, and how to respond to expectation gap. How to respond to the expectation gap is to let the public know that this is not the actual responsibility of an auditor as what they conceive in their mind, and statutorily, this is the responsibility of an auditor. So this one would now take us to another question again. Like I said, we are not going to rush this class. This chapter, we are going to take our time. Who can tell me? I just need 3 people. I don't need more than 3. Just 3 people. What do you understand by the word true and fair? When something is true and fair, just let me know. One, Petia, one. Who else? Just 3 people. Any other person apart from this? Then Mr. Paul, that's 2. Who else? And Olayinka, that's 3. So let's start from Petia first. What do you understand by the word true and fair as relate to audit reports of financial statement? True and fair. Peter, you have the floor, please. Okay, let me unlock this thing. It was Utsman that okay. Peter, please, you have the floor.
Yes, good afternoon, sir. Well done, sir. Yeah,
Good
what I
evening.
understand,
Yeah.
good evening. What I understand by true or fair value, a true or fair view of the financial statement in respect to audit is when the auditors give an opinion about the audit based on their audit procedures, that the report, the financial statement, is without material misstatements.
What is that true and what is fair as relate to financial statement? When they said so, the financial statement is true and fair view. What does it mean?
Okay, maybe it
That
means
is the question.
The statement has been carried out in accordance to all the laws and regulations, or it has met all compliance regulations.
You have merged the two together. What does it mean? What does true mean and fair mean separately?
Okay.
Now you get my question. Okay. Can we call another person so that you'll be thinking about it, Dan Abi?
Yes, sir.
Peter.
Yes, sir. Yes, sir.
Okay. So let's go to the other person. Yinka Olayinka, please, you have the floor.
Good evening, sir.
Good evening.
For me, true means it is complete. The evidence are complete. Why fairness means that they comply with relevant standard.
Not abusive enough. Yes. But we cannot use it like that. It's not well comprehensive. When you say true is what? You said true is
Means completeness.
Completeness.
Yes,
Yes, completeness can go in another context, but not the actual word. You're supposed to use the actual word. Okay, so let's see. Yes, what of okay, and you said fairness too. So in another context, let's hear from another person, Mr. Paul. Mr. Paul, please, you have the floor. Please, after Paul, every other person, please put down your hand. I just said 3 people, and 3 people asked. Mr. Paul.
Good evening, sir.
Good evening.
Yes, sir. When you talk
Dina,
about
please put down your hand. Okay. Okay, Dina, please put down your hand, please. Oh yeah, Mr. Paul, please move on. Go on, sir.
when you talk about true and fair view, it means that the evidence that has been provided in respect of the audit have met the requirements of the auditor in
Mr.
line.
Paul, what is true? What is fair? What does it mean for financial statement to be true? True is on its own. Fair is on its own. What does it mean that financial statement is true and it is fair view?
True means that the financial statements are complete in their nature, and fair means that they have been the evidence of being provided in respect of the financial statements that have been presented have met all relevant requirements. That's what I mean by true and fair separately, sir.
Okay, thank you, Mr. Paul. Thank you, everybody that have contributed to it. So that's the reason why I ask questions in this class so that everybody will learn. So, in order not to waste our time, you see this true and fair view, it is always used interchangeably. In fact, we now understand this thing very well. You would think that they are the same thing because the way we used to say it, you think that they are just the same thing. But the true and fair, true is have its own meaning, fair has its own meaning. But if you merge it together, they will now suit. They will suit the actual context as relate to financial statement or as relate to you giving your opinion on a financial statement. See that true? When something is true, it's just simply interpretation that is that objective assurance that all the information contained in the financial statement are free from error. When something is true, you are giving an objective assurance that the information contained in the financial statement are free from error. That is for true. Then for fair, when something is fair, you are trying to give objective assurance that the presentation and the presentation used in the financial statement does not create any impression, does not mislead, does not create any impression for misleading at all. You are trying to give an objection that the financial statement or assurance that the financial statement are prepared, are fairly presented, and the impression are not what misleading. I'm not sure if you understand what I'm saying. When something is true, you are trying to give objective assurance that the information is free from error. While fair, you are trying to give an objective assurance that the presentation of the financial statement and the impression are not misleading. So, if you now understand the two together, how do you now put the true and fair view together in your financial statement? You see, when something is not true and fair view, it can now you can term it in like 5 ways. First of all, it's trying to imply that the financial statement is in compliance with regulatory or relevant requirements. Two, you are trying to say that the financial statement is in compliance with accounting standard. Three, you are trying to say that the financial statement is, who is this person now? You are trying to say that the financial statement is meaningfully presented and disclose all the information. You are trying to say that the financial statement is free from material misstatement. So by the time you join the true and fair view together, it should be able to give you relevant meaning to tell you that the financial statements are prepared in accordance with regulatory requirements, that the financial statement is prepared in accordance with regulatory standards, that the financial statement is free from material misstatement, that financial statement prepared is free from error, that financial statement prepared is presented in a way that is not what misleading the public. So by the time you understand this true and fair view very well, you'll be able to put it down in your head. That is why I ask that what is true separately, what is fair separately. So by the time you put everything together, it's supposed to give a whole meaning. Like the account is free from material statements, it is true, it is fairly presented, it is prepared in accordance with regulatory requirements, it is prepared to not to mislead the public. The account is free from error, and it is prepared in accordance with international standards. So we have to compare or put all these spice inside to make a meaningful meaning or meaningful word of the word true and fair view. Please, can I proceed, please, everybody? Can I proceed? Okay.
Yes, sir.
Because today we are not going to rush ourselves. We'll take it slow. Now, let us go. You now see what I'm saying now. The meaning of true and fair and fair presentation have an equivalent what meaning? Have an equivalent meaning. So the term true and fair view have not been rigorously defined either by law or by auditing profession. Many legal authorities and writers on auditing have developed their own definition of term. The main point to note are as follows. Assessing whether the financial information is true and fair is more an art than science. See this word. Assessing the financial statement is. Please, are you seeing my screen? I want to stop sharing. Okay. I will share again. The network is still the network is still. So now this is what we are saying. They said the main point to note are as follows. Assessing whether the financial information is true and fair is more art than science. What does it mean that it is more art than science? Science is what we believe that it is it is natural. While art is what we created in with our own hand or from our own hand. So we should have this. Everybody, please, can you hear me? If you cannot hear me at this point, probably it's your network. So I'm saying here that they said the word true and fair is more an art than a science. Science is what we believe that it is natural, what we believe that this is going to happen, or it is natural or peculiar to human being or to human phenomenon. While art is what we create by ourselves. So we should see true and fair of financial statement as what we create by ourselves to suit that way, not what we believe that this is how it's supposed to be. Take, for example, the assessment relies heavily on the judgment of the auditor. That's what I'm trying to say. That with ever things that we have seen, what makes it to be an art rather than science is that it is judgment of the auditor. It is what the auditor think or his opinion that is going to supersede. It is appropriate to think that true and fair are combined traits. In practice, true can be interpreted as providing objective assurance that the information contained therein is virtually without error. Please, everybody, can you hear me, please? There is this madam that is there disturbing this class that she cannot hear me. Madam, is your network? Maybe you should log out and log in again. Okay. True can be interpreted as providing an objective assurance that the information contained in the financial statement is virtually without error. While fair can be interpreted as providing objective assurance that presentation and impression are not misleading. So, in summary, true and fair will normally imply 1. Compliance with any relevant legislation and accounting standard. 2. Use of accurate figure or best possible estimate. Use of accurate figure or best possible estimate. 3. Meaningful presentation and disclosure of information. 4. The avoidance of bias, distortion, and manipulation of figures. 5. no concealment of material information. All these things are embedded as the meaning of true and fair view. So now we are moving forward. What is unmodified report? What is unmodified report? Mr. Nathaniel, any issue? So you see, when something is unmodified, it means that it is free from material error. That is, no issues from the opinion of an auditor. So that what true and fair view, it can be interpreted in your audit report as unmodified audit report. When something is unmodified, it means that from the opinion of an auditor, the account is free from error. From his own opinion, from what he has gathered, from his own review, from his own observation, when he has finalized or he has concluded this account is true and fair view, then the next thing that will be reported in the audit report is to give an unmodified audit report. You see, this unmodified audit report is stipulated by ISA 700. Dear professional, please, are we following, please? Are we following? Okay. Please, can I proceed, please? Do we have any question? No. Are we enjoying the class? Yes. Can I proceed? Yes. So, let us go. Like I said, if you understand this truth, that is why I asked this question, that someone should help us with the meaning of true and fair. Then, in the summary, what does it mean to be, for our account to be true and fair? I would substantially establish the meaning of true and also fair. Then, in summary, we merge the two together, the meaning of true and fair view. Then, when an auditor has be able to substantially decide that the financial statement is true and fair view, the next thing that will be reported in the auditor's report is to present an unmodified audit report. Please, can you see the way I'm trying to lay the step one by one? Because if in your mind, as an external auditor, that the account is not true and fair view, you cannot give an unmodified audit report. It's because you have established, and in your opinion, you have decided, or in your opinion, nothing has come to your mind that this account is not true and fair view. If you have decided, and in your opinion, that the account is true and fair view, the next thing is to produce an unmodified audit report. So what is that unmodified audit report? Let us see. The unmodified audit report is a report containing an audit opinion not modified in any way. The modification may either be changing an unmodified opinion or by adding an extra paragraph as other matter or emphasis of matter. When you are giving an unmodified audit opinion, it means that the account is true and fair view. But if there's any other thing or any other information that is relevant to the financial statement that need to be incorporated in the audit report, or maybe anything that relates to disclosure and presentation in the financial statements that need to be put in the audit report for the user of financial statement to take note of that particular information. That is where you can have key audit matters, case may be, or emphasis of matter. But in nutshell, when you have decided as an auditor that the account is true and fair view, the next thing is to produce an unmodified audit report. And unmodified audit report is that report stating or showing that the financial statement is free from error and it is free from material misstatement. So let us go. ISA 700 now require auditor to give an unmodified opinion when he concludes that the financial statement has been prepared in accordance with applicable financial reporting framework. An unmodified opinion provides high level of assurance. High level of what? Of assurance. Before the auditor expresses his opinion, he is expected to evaluate if, before an auditor now expresses his opinion on the financial statement, he is expected to evaluate if, number one, if he has obtained sufficient appropriate audit evidence. They are telling us that before an auditor can express an opinion on the financial statement, he must have evaluate the following. One, if he has obtained sufficient and appropriate audit evidence. Two, materiality of uncorrected misstatement. Three, if financial statement has been prepared in accordance with applicable reporting framework requirement. Four, if financial statement is adequately disclose the entity's significant accounting policy. Five, whether the accounting policies are appropriate and consistent with relevant financial reporting framework. Six, if the accounting estimate or figures are reasonable, relevant, reliable, understandably, and comparable. If the financial statement are provide adequate disclosures, then that is when an auditor can provide unmodified audit report. What we are saying in essence, I said that before an auditor would produce an unmodified audit report, it must have satisfied in his mind that the account is free from error or the account is free from material misstatement. So, or the account is true and fair due. So, when the account is true and fair due, before an auditor can now say the account is true and fair due, it must have evaluated these other things that we just read out to ourselves. One, it must have evaluated the account is free from error. It must have evaluated the financial statement is prepared in accordance with regulatory requirements. It must have evaluated that the financial statement presents adequate disclosures, that the financial statement is accurate, understandably, relevant, and reliably prepared. So, if all these things have been evaluated, then you cannot produce an unmodified audit report in accordance with ISA 700. My dear professional, please, are you following? Please, are you following? Please, can I proceed? Please, at this junction, if you have any question before we proceed, please ask now. Any question before we proceed, please ask now. I'm taking my time now because by the time we start treating this thing, there will be a question on this chapter that requires our attention. The pilot question that prepared for our revision class. So a question is coming from this chapter, and you see the way the question is structured. It might not go straight like this, but our understanding on this subject matter will make us to have a good edge or better edge while we want to answer any question in advanced audit and assurance. Please, professional, can I proceed, please? Do we understand so far? Okay. I'm taking my time and I'm not rushing. Okay. So let us go. Now, after that, what are the basic elements of audit report? By this basic element, it means what are the content that should be present in any unmodified audit report. The content that must be present in any unmodified audit report. These are what we call the basic element of auditor's report. Number one, and I said, in line with ISA 700, the following are some basic elements of an unmodified auditor's report. One is title. There should be title page. that is audited financial statement of XYZ Limited, 31st 31st December 2024, as the case may be. The address, that is the company address, will be on the auditor's report. The auditor's opinion is stating whether the financial statement is true and fair view will also be present. The basis of his opinion, what basis, on which basis, whether the basis of opinion is, I'm giving this opinion because the account is fairly presented and it is prepared in line with what regulatory requirement. That is the basis of opinion. It must also be present in what, in our auditor's report. Going concern, which is Article 570. Uncertainty, material uncertainty of going concern has to be included in our auditor's report. If the company, the reason why we are putting this going concern is it is expected, they said before that audit report has been so very, very brief. So now there are some other relevant information that does not relate to figures in the financial statement, but has to be to be present in the report for the shareholders to take note, and also for the user to also be aware for their decision also. That is why most of these things you'll be seeing are important to be included in the auditor's report. Such as Article 570, which is on material certainty of going concern. You see, when company has been making loss for the past 5 years, and you auditor, you see that this company has been making loss. So that is 570 say that it is compulsory, important for you as an auditor to put that phrase as other matter paragraph under your audit report as what, as that point for the users or the shareholders to take note that the company have issue of material uncertainty of what, of going concern. If there's any issue like that, it should be reported in your audit report. Key audit matter, ISA 701, if any. ISA 701, like poor revenue recognition, impairment of assets. If there's anything like that, and this key audit matter, ISA 701, we are still coming there immediately after this thing. You will know what it is, what we normally call key audit matter, and if it is present, how we are expected to report it, and how we are expected to include it in our audit report. So if there's any key audit matter, ISA 701 should also be included in our report. Other information like disclosure and presentation of accounting policy, we should also include it in our auditor's report. Responsibility of financial statement, responsibility of the financial statement, responsibility of the management will also be present in our auditor's report. Auditor's responsibility, the responsibility of the auditors will also be included in auditor's report. Other reporting responsibility, maybe like shareholders, maybe like directors or the shareholders, their responsibilities should also be included in the auditor's report. Name of engagement partner, the name of the audit firm should be included in the auditor's report. The auditor's signature, the auditor's address, as the case may be, will also be included in the auditor's report and the date of audit report. These are the content, the basic element of an unmodified, like I said, unmodified audit opinion in accordance with ISA 700. So we are moving forward now. What is now key audit matter? So everything will be discussing now. There will be some adjustments or some things that should be included in the audit report, apart from you giving an opinion that the financial statement is either free from material misstatement or not free from material misstatement. You are giving that the financial statement is true or true and fair view or not, and then you are concluding that the financial statement is free from material misstatement or not. That is your opinion. But some matters or some other things that need to be embedded in the audit report, those are the things we will now be discussing now. Unlike like this ISA 701, the ISA 706, the ISA 510 and 710, the ISA 570, then the ISA 720. Those are the things that also needs to be included in the audit report, apart from the opinion you have established whether the financial statement is of true and fair view. My dear professional, please, are we following? Please, everybody, can I proceed? Can I proceed? I'm taking my time. We are not rushing today. I took my time. I want us to understand this thing very well. I've given us the basic elements. I've explained the meaning of audit report, the expectation gap, the closing of expectation gap, the aspect of true and fair view. Then true and fair view now lead to unmodified audit report. Then after unmodified audit report, we also say that before an auditor can give unmodified audit report, he must have evaluate the following. And I have also given us the evaluation before you can pronounce or before you can give unmodified audit report in accordance with ISA 700. Then we also talk about the basic element of auditor's report, which we have explained to ourselves. And I said, for you to give an opinion that the financial statement is of true and fair view, that is your opinion, which is one of the basic elements that should be included in the auditor's report. But there are some other things, apart from that opinion, there are some other things that is important that must be present in the auditor's report. And those are the things we'll be explaining to ourselves in the next couple of minutes, or maybe on Friday when we continue this class. So quickly, one of the things there that must be present is ISA 701, key audit matter. What is this key audit matter? See, this key audit matter, they are the matter that are most significant, very, very important in the financial statement, but they do not relate to figures or they do not relate to financial information. I'll say it again. They are important matter, they are most significant matters that are to be reported or that are present in the financial statement of a particular organization in that current year. This matter, they do not relate to figures or financial information. When we say figures, we mean all the figures reported in the financial statement. Key audit matter, they do not relate to all those figures or the accounting information. However, they are important that they need to be reported in the auditor's report for the attention of of both the shareholders of the organization and the user of financial statements. What are the examples of this key audit matter? Revenue recognition. Under our statement of comprehensive income, of course, revenue will be reported. So if the way the revenue has been reported or the way the revenue has been captured is not in line with IFRS 15, then it is a key audit matter, because the IFRS 15 says that revenue should be recognized when this thing has been met, the right and obligation has been what, or the users or the owner are started enjoying the right to that property, then you can recognize revenue. So if the company is not recognizing their revenue in accordance with IFRS 15, then it is a key audit matter that needs to be reported in the auditor's report. Can you see that this example, it does not relate to the figure. It does not relate to figure. It's just that you are not picking the right figure, but that figure, something must be there. So if there is any issue like that revenue recognition, it is a key audit matter that needs to be reported in the audit report. Now, impairment of assets. When fixed intangible assets need to be impaired, then if they are not impaired, they are not calculating depreciation on it. Instead of them to impair it, goodwill that is supposed to impair, then the normal this thing is to impair the goodwill while you depreciate what fixed asset. Maybe the company is now impairing is now depreciating the intangible asset instead of impairing it. You know, this thing is just like presentation or disclosure that is not properly done in the financial statement. They do not relate to figures. So all these things, they are key audit matter. And whenever we spot one or two of these things during our review or during the audit of financial statement, it should be reported as key audit matter under our auditor's report. Dear professional, do you understand at this point the meaning of key audit matter now? Okay, so let us now see what we have. Key audit matter. And now let's go. ISA 701 is a new ISA that was introduced in 2015 to make auditors report more informative and useful to users. Key audit matter terms are matter that are most significant in the financial statement of the current period. Terms are not concerned to the auditor and not to the users of the information. Terms are not modification to the auditor's report and should not be confused with modified audit opinion. When something is modified, it means that the account is not free from error. But when something is unmodified, it means that the account is free from error. Everything is okay. When everything is okay, they give unmodified. But when everything is not okay, they give modified. So in a situation where you now have key audit matter, there's element of key audit matter, and you reported it in your auditor's report. They said people should not take it as if that you are trying to say that the account is not free from error. No. Key audit matter, which is ISA 701, is different from modified audit opinion or audit report, which is covered by ISA 705. So let us go. Now that we understand the meaning of key audit matter, let us proceed. The auditor is expected to assess area of material misstatement risk. The effect of significant event counts are subset of matter that require significant auditor attention, which themselves are subset of matter communicated with those charged with governance. In some cases, there are no counts to communicate. The auditor should include a statement to that effect. Now, example of key audit matter: revenue recognition. If there is poor revenue recognition, the key audit matter that need to be reported in our auditor's report. Impairment of goodwill or intangible assets when they are not doing it properly is a key audit matter that need to be reported in our audit report. Valuation of financial instruments, IFRS 9. How do you value our financial instruments in order to give financial assets or financial liability? How do we value financial instruments in accordance with IFRS 9? If we are not valuing it very well, to give either financial asset or financial liability, it is key audit matter that need to be reported in the audit report. So how we can understand the key audit matter and the example? How do we now communicate the key audit matter? Communicating terms, communicating key audit matter. Let us go. Let us go. Communicating terms. For every key audit matter, the description must explain why the matter are considered to be one of the most significant in audit and how the matter was addressed in audit. The way you are communicating key audit matter, all these things, you just put it that you just put it in your report. You are trying to communicate that why you this matter are considered to be what most significant was because the revenue is poorly recognized. There is no impairment of goodwill. Financial instrument is wrongly valued. So that is why you consider that most important matter and that needs to be included in what in the audit report for what for attention of the users of financial statements and the shareholder. So what there is now another word that also needs to be included if available. That also need to be included in the auditor's report is ISA 706. You call it emphasis of matter. I posted this thing on my LinkedIn page before. Difference between key audit matter and emphasis of matter. Some people also used to take the two as the same thing, whereas they are different. Emphasis of matter is different from key audit matter. So I will state the example now. when something is when we emphasis of matter are those matter that should be included in audit report to draw the attention of the users of financial statement on a matter that is appropriately presented or disclosed in the financial statement. Example of that, you know, in financial statement, they used to disclose or present that, oh, the asset is depreciated at 20% for land and building or for office equipment, for plant and machinery 15%. Those are what? Those are presentation. They presented it in the financial statement. So emphasis of matter, there are those matter that is used to draw attention to the matter that is appropriately presented or disclosed in the financial statement. Key audit matter is those things that the auditors find out that it is significant, but does not relate to figures in the financial statement, but it is significant for the auditor to be reported in the financial statement for the shareholders to be aware or to draw the attention of the shareholders to that particular important matter. That is what we call key audit matter. Why emphasis of matter? Yeah, that matter also to draw the attention of the users of financial statements on the matter that is appropriately presented or disclosed in the financial statement, but is of such importance too that it is of such importance that it's fundamental to user understanding of the financial statement. Can we now see that there is difference between emphasis of matter and key audit matter? So example of key audit matter, uncertainty about going concern, which is ISA 570. You see that going concern that they said they should be reported in the financial in the auditor's report. This is an example of emphasis of matter. So if they are available or if they are present in during your review or you notice it is you have to be included, you have to include it, or rather you have to include it in your auditor's report as emphasis of matter as stipulated by ISA 706. Another example is significant subsequent event. We talked about subsequent events before, which is subsequent events. Is it not IS 24 like that? I think so. Yes, it's IS 24, right? Subsequent event is IS 24 now. So any subsequent event, yes, we have to be reported as emphasis of matter under our audit report. There's changes in accounting policy. If an organization is changing their accounting policy, maybe from cash basis to accrual basis, or they are changing their year end from 31st December to 31st of March, all these things, they are emphasis of what? Of matter that need to be included in the auditor's report. Okay, sorry. Okay, yeah. Someone is saying that ISA 24 is related party disclosure. Yes, why ISA 10 is IS 10 rather is event after reporting period, which is subsequent event. So those are the examples of emphasis of matter. So what are the differences, the interaction between emphasis of matter and key audit matter? Let us see. So after this, we are going to stop the class today and continue on Friday. So let us go. The objective of an emphasis of matter, emphasis of matter paragraph is to draw attention to matter included adequately presented. That is, when objective of emphasis of matter is to draw the attention of the user on the matter that is adequately disclosed and presented in the financial statement or related disclosure, which in the auditor's judgment are fundamental to user and understanding the financial statement, e.g. subsequent event. ISA 706 reversed has been reversed to reflect the fact that matter needing highlighting as fundamental to user understanding may now be determined as CANS. That is, if matter that highlighting as fundamental to user, they can now understand it and determine it as counts as key audit matter. However, the auditor may wish to highlight or draw further attention to their relative importance by listing them first as key audit matter or by including additional information in the count description. So we are trying to see the differences between what ISA 701, which is key audit matter, and ISA what? ISA 706, which is emphasis of matter. So let us go again. An emphasis of matter paragraph. An emphasis of matter paragraph shall only be used to highlight key matter that are not considered to be counts. So we also use emphasis of matter to highlight matter that are not considered as key audit matter, and hence are not described or highlighted in the count section of the auditor's report. There are different matter or issues that may arise in audit and may be seen to be key audit matter. Even though they may be key audit matter, they are expected to be treated under different sections of the report. The following are the matters and its treatment as shown below. 1. Modify opinion, which is item 705. So, counts is not substitute for expressing modify opinion. That's what I said before, that if there is key audit matter, you should not say that because there is key audit matter, you are now giving the account that, oh, the account is not free from error, the account is not free from material misstatement. That's what they are saying here, that counts is not substituted for what? For modify audit opinion. Key audit matter is just matter that are very, very significant, that but did not relate to the figures in the financial statement, which should be reported for the attention of the shareholders of the organization. So key audit matter is not the same thing as modify audit opinion. Any matter that require a modified opinion shall be explained in the basis of modification paragraph rather than treating it as key audit matter. Another one that needs to be treated in the auditor's report is going concern uncertainty, which is at 570. Where going concern uncertainty is, the auditor is expected to include in its report material uncertainty in relation to going concern, a paragraph, and describe the materiality uncertainty in the paragraph. So what is now the interaction between the key audit matter and other matter? Other matter is covered by ISA 720 or other information. So let us go. Interaction between counts and other matter. Other matter are defined by ISA 706 revised, related to matter other than presented or disclosed in the financial statement. Don't forget, ISA 706, as we said it is emphasis of matter. So if there is any other matter that is other than emphasis of matter, it is also expected to be disclosed in the financial in the auditor's financial in the auditor's report rather. If there's any other matter apart from emphasis of matter, ISA 706 reverse stipulate that such matters should be included in the auditor's report. So let us go. Other matter as defined by ISA 706 revised relate to matter other than those presented or disclosed in the financial statement, e.g., the fact that prior year financial statements were audited by predecessor auditor, given that counts are always drawn from matter relating to the presented or disclosed financial statement. There shall not be overlap between other matter and key audit matter. What we are saying in essence is that you should not take key audit matter as other matters or emphasis of matter. If there is key audit matter, it should be reported separately in the auditor's report. If there is emphasis of matter or other matter paragraph, it should also be included separately in the auditor's report. So we should not take key audit matter as emphasis of matter. And however, we should not also substitute key audit matter as modification for modify audit opinion. So let us go. So we've discussed about it. The accounts are not substitute for expressing modified opinion, as the case may be. So after that, let us proceed so that we'll move forward. Now, the next thing is other matter, which is item 706. We have discussed key audit matter and what we are expected to discuss under key audit matter. Then the next thing to discuss is, so the next thing to be discussed is other matter. Like I said, I want to finish all this matter before we stop the class. So we'll now continue from where we stop next week. If there's other matter, which is item 706, then how are we expected to what? To report it in our auditor report? Other matter. In line with item 706, other matter are matters other than those presented or disclosed in the financial statement. When we are talking about emphasis on matter, they are the matter that are disclosed appropriately. They are presented and disclosed appropriately in the financial statement. Example, they are subsequent events, which is example of emphasis of matter. What other example do we just mention now? What other example? Going concern, uncertainty of going concern. They are emphasis of matter. They said they are the matter that are what? That are appropriately presented and disclosed in the financial statements. That is emphasis on matter. So, but other matter, there are those matter that they did not present or disclose in the financial statement. Those are other matters. Other matters is different from emphasis of matter and key audit matter. So, emphasis of matter, there are those matter that are presented in auditor's reports to draw attention of the user of financial statement to some matter that are appropriately presented and disclosed in the financial statement. While other matters, they are the matters that need to be reported in our auditor's report, other than those matters that are appropriately disclosed and presented in the financial statement. So, however, if there's any other matter, the following are the way in which auditors are to report or any other matter in our auditor's report, or this is the content of other matter that how we are expected to report it in our auditor's report. Number one, the title of the of the matter, you put it there, the address, the opinion, that is the section will contain an expression of opinion and reference to the applicable financial reporting framework used. Then the next thing is identification of entity financial statement has been audited. You also state that, oh, the financial statement has been audited. That is why you are giving this giving this report on other matters that are not presented or appropriately disclosed in the financial statement. Let us go. A statement that the auditor is independent of the entity in accordance with relevant ethical requirements relating to audit and has fulfilled the auditor's other ethical responsibility in line with requirements. It may also be referred to as ISD code. Where applicable, a section addressing material uncertainty of going concern in compliance with ISA 570 is also either emphasis of matter or other matter, which need to be reported in our auditor's report. Then again, where applicable, key audit matter will also be reported in as other our auditor's reports. Where applicable, other information section, which is ISA 720, we are still coming there later. A description of management responsibility in the financial statement will also be included in this report. Then a reference to ISA and law regulation, including description of auditor's responsibility for audit of financial statements, will also be included in the report of on other matters for listed entities. Name of the engagement partner, unless in rare occasions, such as disclosure is reasonably expected to lead a significant personal security threat. Auditor's signature, auditor's address, date of auditor's report, and note, this heading above also align with those specified by ISA 700 on unmodified auditor's report. Now, we are now going to continue here on Friday, which is reporting requirements on CAMA 2020 on auditor's report. So let me keep the question briefly, just 2-3 minutes question before we call it a day. Now, Julius, you have the floor. Julius, you have the floor. You just raise up your hand.
I don't know if you can hear.
I can hear you.
Okay,
go on, sir.
Okay, please. My question is not part of what you have taught. I really appreciate what you have taught, and I understand it very well. Please, I was the one that messaged you today, this afternoon, regarding my inability to register my.
Okay. So, yeah, I've forgotten. Sorry. I don't know if anyone has been able to register for exam, although there's a link that now everybody they cancel the use of web pay and this pay direct that we used to buy in the bank before. It is now through Monify now. So a link will be sent to you. You fill your details, and after when you want to make payment, the transaction reference code will be sent to you in order for you to be able to make payment. So he complained that after inputting all the necessary information and clicking on generating transaction reference, that the reference was not he did not receive the transaction references in his mail to continue the registration. So he asked whether everybody is also going through the same issues while registering for the exam or not. But me, generally speaking, I'll just believe that it is due to the traffic on the site. Maybe you should just try and maybe when you wake up in the midnight or early in the morning around 6, you should try it again. But if not, then you escalate it.
I've been trying it since 1 week or day and night.
Then you should have tried and escalate to student affairs now. Then you should send mail to student affairs and let them know what you are going through, so they will direct you properly. So is there anyone that has?
But I was able to pay my own very easy.
Please, you got the reference. So, you sent the reference to you.
Yes, I got the reference in my mail. Drop immediately. Drop immediately.
Maybe the mail you provided. Okay, did you check your spam mail, Mr. Julius? Because most of these things you might not see it in your inbox. You might not drop in your inbox. It might drop in your spam mail.
Okay, I didn't check spam mail.
I can check the spam mail, because I can most of the ICANN mail that they will send to you, even for all that have qualified now. If there's any maybe conference to be attended, you just check your spam mail. You just see it there. It will not drop in your inbox. So try and check your spam mail. So if you don't see anything, then you try and escalate.
Okay, so, thank you very much. I really appreciate it.
So this is where we are going to stop for today. Okay, no problem. This is where we are going to stop for today. Please, everybody, this chapter is no play, no dulling. Let us take it very, very serious. So before we continue next week on Friday, I'm going to recap on what we have discussed today before we now finish it up on Friday. So thank you everybody for staying through. Thank you. I know it's been an hectic day, but nevertheless, thank you for staying through. So we'll continue on Friday by God's grace.
Yeah. Thank you, sir. More strength.
See you on Friday.
More strength. More strength.
Thank you, everybody. Good night. Good night, everybody.
Thank you, sir. God bless you, sir.
Amen.